Welcome to Talk Sense, and today I have a very special guest. I have Joshua he's the CEO and founder of Stratos. Welcome, Joshua, to our Talk Sense show.
Thank you very much, Prem.
So, how's Dubai treating you till now?
Well, Dubai is lovely, especially this time of year. It's
You've been
cooled down
many times, obviously, out of here
Yeah.
from your travels from the African continent and the US continent. So, yeah, I mean, this busy, you must have been busy also with different conferences here in the region.
just winding up from the blockchain week. Yeah,
Absolutely. I mean, there were different kind of activities happening. Of course, in Sofitel, Agora Group had some activity. Then there were some evening parties where I was not present. But yeah, there have been a lot of activities
famous
actually.
crypto parties. Yeah,
Absolutely going on as well. Now, I know Joshua for some time, and the reason we've been talking actually is the fact on regulated ways of finding, raising capital. Now, obviously, Joshua, I've been speaking to you and also getting advice basically on different ways of doing a capital raise.
Mm.
And one of the things have always been that you're very much aware what's going on in the US in regulatory wise. Maybe you can give a little bit of explanation while doing a capital raise, why it's a wise idea to do it out of the US, which is obviously the biggest capital market in the world.
the biggest capital market, and I think most robust structure. Right. So you've got a structure for private placement of debt and equity that is globally recognized. And it's easy to create a credit profile off the back of a U.S. regulated entity or U.S. regulated issuer. So, like, for example, where I started with this whole dynamic was with ICOs. And I was quickly looking for an opportunity to get regulated as I felt like I was at risk, from a advisory standpoint, from a broker standpoint, that I'm maybe putting out securities that are unregulated. And as a U.S. citizen, I had to think very quickly on my feet. And so I started looking at like 506C, 506B, like the Reg D, Reggae Plus structures. Those are really interesting because those were created specifically for new to market entities to fast track into like a public market security or NASDAQ listing. So those became very, I think, favorable for structuring for private placement, generally for startups. But then on a global basis, most family offices, most institutions have some experience in investing in U.S. structured vehicles. So when you're building a private placement product, whether under Reg D or A+, it's broadly known. It's well known, and it's relatively easy to facilitate and build, and a relatively short period to market. Some of the advantages, right? So
Definitely. And then, of course, and please correct me if I'm wrong, is the fact that Reggae Plus, you can have retail investors to come in,
yeah,
while in a Reg D 506B or C, you're working only with accredited investors accordingly.
yeah. So Reggae Plus is interesting because it's essentially a public market security. You're essentially going OTC without listing OTC, right? Or listing on an OTC marketplace.
Perfect.
So you're creating a public market security with certain restrictions in terms of capital that you can raise. It's, I think, capped right now at 75 million.
Yeah.
You've got some credit qualifying criteria from the SEC, so you have to go through audits in order to qualify the issue before you go to market. But it's very dynamic in the sense that it can then qualify for NASDAQ with an additional light layer of audit, right? So that becomes very interesting and dynamic for an issuer that's looking to go public, right? Or maybe reverse merger into a NASDAQ via SPAC.
No, so definitely. So if you rewind back to 2016, 2017, when the ICO market was actually very much booming, we saw that, of course, it was, I mean, for a lot of people, it was very easy to get a website and a white paper and then start off, right? So the whole thing was this, that at that point of time, a lot of capital was raised, and it came, according to me, that it was very difficult before to do a capital raise where retail investors could be a part of. So a synergy or a time lapse, if we go fast forward, there was a need for something called crowdfunding, and we saw also crowdfunding websites explode. But more importantly, we also saw that people were able to put a lot of money actually in out of their savings to do so. Now, fast forward, we're now in 2021 and nearly getting into 2022. The crowdfunding demand is still there, I think.
Definitely.
If we look into what is happening right now in just the traditional crypto market with NFTs and DeFi, for example, the market is going absolutely wild. So that demand is back again.
Totally agree. Yeah.
And at the same time, again, it's not in that regulated space, which I found like, okay, are we going to burn our fingers again?
Yeah, it's an interesting dynamic because you have this massive growth trajectory on DeFi and NFTs in the past 2 years, which is just explosive. And again, it's peer-to-peer, right? It's DEX, it's decentralized. There is not regulatory framework in place for this type of a marketplace, but it exists.
True.
Right? And it exists in a major way. So, maybe regulators aren't keeping up with innovation. And I had this conversation actually about a month ago, or maybe a month and a half ago. And going back to 2018, I was in a conference and I had a conversation with a VC. And his position at the time was innovate, grow as quickly as you can, outpace regulators so that they catch up to you. Wow. Which is what is happening, yes. Right? That's what's actually happening.
Wow.
And I was of the position at that time, regulation. Regulation still hasn't caught up. We're still not there with the regulators. So, we're in a position now that we have to really take into account the dynamic of innovation.
Yeah.
And the marketplace value of DeFi today is extraordinary.
True.
Right?
True.
The marketplace value of NFTs is extraordinary.
Absolutely.
So it's something that cannot be avoided. How do we fit that into existing regulatory frameworks? I think that's a big question that needs to be answered.
No,
and that's what we're trying to do with the Stratos platform.
Absolutely. I mean, you've guys been a couple of years now in the market to see what is going on and having I want to say niche market, but a specific securities token market as it is. So for that matter, you guys have been creating a primary issuance role, and then from there, try to create that market as it is. And I mean, from looking from my side, from Grip side, for example, we've also been trying very hard to do something in this space. But yeah. It is always a ping pong between what regulators are able to give and what the market is demanding as it is.
Yeah, there's market inefficiencies, right, that technology addresses. And regulators aren't as quick to address the market inefficiencies as technology and innovators are. So it's like, where does this stuff synergize? And I think at a certain point, marketplace growth outpaces regulatory frameworks. And so you just have to go as quickly as you possibly can. I've come to that conclusion. I now agree with that thesis, and I'm running with it. and thankfully here in Dubai, we have the framework under which we can operate, right?
Yes.
I mean, they've taken a very measured approach and have identified clearly where we're at in terms of digital securities, cryptocurrencies, digital assets, etc. So I think from that perspective, the UAE is positioning itself to be a global leader in the marketplace for all things digital.
No, absolutely. And I think you're making also a remark to papers which has come out from the DFSA a couple of weeks back regarding this, new framework around digital securities and the fact how to look at cryptocurrencies as different free zones here are adopting very fast. As DMCC, you must be aware as well. Adapting very, very fast and allowing companies to come in and set up as we go forward. So having said that, I mean, of course, this market on securities is something very, very interesting. I mean, a couple of things before I look at listings at different exchanges around the world. Of course, Dubai wants to be in that forefront, so that's why they're playing the role, and that's why we're having actually so many conferences up here. A couple of weeks back, we also had a blockchain week here in DIFC specifically. But more importantly is the fact that you are anticipating, and that's why you're also and correct me if I'm wrong, setting up in this region your footprint to accelerate as it is, because I know you quite well, and you're like a global citizen in that way. You've seen every kitchen, understood what the pluses and the minuses are, and based upon that, looking at this region as a next step for growth.
Yeah, well, I mean, the future is digital, Prem. I think we had this conversation earlier, and we're already in the digital era, right? So taking it to the next step with blockchain and tokenization is just an evolution of an already existing marketplace dynamic. So there's not really anything that new here. We're just making it easier to digest, right, for regulators and for existing marketplace incumbents to get involved in the new digital era. And so that's what we're positioning ourselves for. And I think that, again, going back to the local regulatory framework, it's extremely advantageous. And Dubai has a dynamic leadership that really gets, I think, future vision. And we want to be a part of that story.
Sure.
And we're here for that reason.
No, absolutely. Well, I still want to address something, right? I mean, looking for somebody to get into an exchange and able to do some kind of transaction. Most of the time you need something like a MetaMask, to do that. And then there actually most of the people who want to go into the space actually stop, because it's quite difficult for them to, it is quite technical. But once you've done it, or once you like myself, I looked at a couple of YouTube movies and then understood, okay, this is how MetaMask works, and then able to open that Ethereum wallet is something where a lot of people still shy away from. So for me, looking at a little bit of a distance is like, to get mass adoption, it should be on the known platforms as it is, right? I mean, let's say I'm doing stock trading myself. I might be doing it on Interactive Brokers or on a different kind of platform, a Robinhood or something like that, which is known for me that, okay, this is my bank account, I send the money, it shows up in my back office, and then based upon that, I'm able to trade or do my activities. Where do you see that this kind of innovation could help us going into the next phase of mass adoption of
well, I mean, I think it's there at the institutional level, because you already have virtually every single major investment bank with a cryptocurrency trade desk, right? They're all involved in Bitcoin. Every major investment bank globally is involved in Bitcoin.
Okay.
To a large extent, ETH, right? So most family offices are taking a position. Most large fund managers, the CEO of Apple, I just saw a blip where he says, I own cryptocurrency and have owned and have been very interested in cryptocurrency for a very long time. So those people, they've sort of been waiting for, the regulatory framework to catch up, but they've been involved since early days.
Got it.
So the institutions were just waiting for the regulators to say, okay, and now we've got Bitcoin ETF, right? We've got leverage trading on digital assets. We've got CBOE. So there's institutions that are recognizing digital and recognizing crypto. When does it extend to retail? Well, retail is there. Retail is within the DeFi space. Retail is within NFTs. It's the 14-year-old kid that heard about Bitcoin that's now setting up a MetaMask wallet to buy SHIB, right? And he bought SHIB maybe 6-7 months ago, and now he's a millionaire. So I mean, those are kind of like funny stories, but in reality, that's what's going on. And I think recent announcements with some major platforms, Telegram, for example, where they're talking about tokenization. Reddit is talking about tokenization and integration with Ethereum. This would mean mass adoption, 100 million users plus. And there are first layer protocols that are available to the marketplace today that are really easy to access. And I think MetaMask is not that hard to get onto. DEXs are not that hard to integrate with. So it's just a matter of going, like you say, to YouTube and getting on
and
there
figuring it out. The whole thing is this, right? I mean, for me, it's been like learning those steps as it is.
Yeah.
But I cannot expect that my mom could go on and do a similar transaction as it is.
Yeah.
Right? And that's where...
that's where you come in.
Of course,
you got to help your mom.
So if you look one layer up, of course, institutions are there, not publicly announcing that they're doing some kind of transaction, but they must be doing something for sure.
Yeah.
Because looking at the daily volumes at times at CoinMarketCap gives you an idea that, well, what's going on actually out up here.
Yeah.
Having said that, where do you think the coming 12 months will go for us? I mean, listening to you, you're quite optimistic on the near future.
I'm super bullish. I mean, I think, the crypto market is here to stay, and that's unequivocal. The bull market that we're in right now, I don't like to make public predictions, but if I had to, I'd probably say another 6 to 9 months on the bull market. Generally speaking, this is the future, and the future is now, right? It's not going anywhere. Regulators aren't going to regulate it out of existence. It's too well established. There's too much capital in the marketplace. It's not going anywhere. It's just a matter of, do places like Dubai step forward, which they are clearly, which signals, we're here to stay, and we're not going anywhere.
Got it.
Yeah.
Got it.
Yeah.
So the near future, you're quite bullish on whatever activity is happening will increase as it is.
Yeah.
Now, I mean, the way I look at activity is actually looking at what's going on in my Telegram groups, or for that matter, what's going on in Discord, to see the activities, within the groups happening.
Yeah.
And of course, there are still also a lot of companies who are using it to hike up the price and then basically a couple of days let it go again. But on the same hand, we see that definitely in the last, I would say 6 to 9 months, there's been a gradual increase as it is. And I think also the number of users, individual have been increasing over the last 9 months, I would say.
Yeah.
So, quite bullish on what it is. And what are you planning to do in Dubai? Because of course, you come and go, but this time you were kind of like hinting that you're going to stay with us.
Yeah, we're here to stay. We're here to stay. So going back to this marketplace dynamic, I mean, I look at the UAE as a base and headquarters for, and the group, US Capital as a group, as well as the Stratos Global platform, look at UAE as a base for global digital operations.
Fair enough.
So growing out the digital asset advisory, digital asset fund management, digital asset brokerage, etc., from Dubai, and then licensing that out to the rest of the world, creating a model largely based off of U.S. private placement rules, which we discussed, is the general thesis. and then addressing the lower middle market, which is underserviced generally, right? So traditional market latency and inefficiencies for the lower middle market is generally underserviced. Syndication doesn't take place well. Growth stage equity and venture capital is not well serviced in the region. So addressing those marketplace dynamics for private issuers and for advisors, brokers like yourself, and we hope that we'll be able to work together and grow that with you together for your issues and for your clients, as well as other RIAs, fund managers, brokers in the region, and then extend that out, right, to address the general, I think, ailing market dynamic or exploitive, maybe, for lack of a better word, market dynamic, especially in the startup space. I've had conversations with startups that have raised capital, but they raise capital very inefficiently. So what we propose to do is to bridge the gap in creating credit-rated market products that institutions and family offices can get into with a lower ticket size, and then extend that dynamic to include tokenomics and tokenized assets, tokenized securities, NFTs, utility tokens, etc., which may be a primary issue. It may also be a sidecar, which leads to a very interesting investment opportunity, especially for those that are positioning themselves for equity, primarily looking at early stage liquidity on the token side.
Fair enough. Fair enough. Okay, I mean, I'm excited also as well, seeing the activity definitely here in Dubai, and also about what's near to come. Of course, I mean, we've been going on in different traditional markets as well, where, as you know, there is at times fear, there's at times greed going on. So, there is a lot of things happening actually in traditional equities markets.
Sure.
As we speak right now. And of course, we're very much there to look at opportunities and create them accordingly. Joshua, I want to really thank you for coming over to DIFC and giving us a little bit brief on what you're planning to do. Before I let you go, I just wanted to ask, what are the best handles, like Twitter handle or maybe Telegram handle, which to reach out to you?
Twitter handle. I'd have to, you're putting me on the spot. I'm not big on social media.
Maybe your website is also a
Stratos.global is the website.
Yes.
For the platform, and then uscapglobal.com is the broker. So if you want to reach out to me, it's jhawley at uscapglobal.com or through the platform.
Awesome.
Yeah.
Thank you so much for coming. I hope to see you soon again.
Pleasure.
And thank you all for listening and having a look at this. Thank you.